And welcome to going over the homework for advanced accounting. Wanted to go over the homework for chapter 10, FX translation, and I wanted to start with going over question number 6 that we have here in the homework. And the question is asking Westmore Ltd here, a company, and they're asking about, okay, so we have a subsidiary and we want to go over and see, okay, what are the sales? What are the sales in the local currency? So Westmore's functional currency in this situation is the pound sterling. So what are we talking about in terms of the pound sterling? We have, these are the rates Jan 1 to December 31. And this is a British company, so the US owns this subsidiary right here. So now in terms of sales, when we talk about sales, and we have the functional currency being the local currency, so we're in this country in the local currency, we're talking about having the average weighted rate as the application to sales. This is the same as income sales. It's the only way to figure it out. So we go 1.59 times the notional amount, which is 1.5 million, right? And this is 1.5 million actually pounds. And the answer we get is C, 2,385,000 by doing that. Okay, so moving on to question number 10. This is what we went over in lecture yesterday. And for this one, as I said, there was a mistake by the publisher here, and in reality, we're using the stickle rate. In other words, one stickle is equal to 0.48 in dollar terms in the beginning, and at the end, one stickle is equal to 0.42 cents in a way. Whoops. So the idea is, on a visual level, if you want to figure this out, and you go like, okay, so what is a million stickles worth in dollars in the beginning of the year? So you apply the rate and you get this million stickles to equal $480,000, translating at the current rate. And then you take the same concept, but just at year end, and you apply the 0.42 cent translation, and you have $420,000. So look, the same amount of stickles is yielding essentially a different amount of dollars. And this is exactly what we talk about when we're saying translation adjustment due to FX currency fluctuation. This is the fluctuation that occurred, a 6-cent depreciation over the course of 12 months, and a total impact of $60,000. The other piece of this was related to this here, the dividend. And this dividend we talked about was paid out on June 30th in stickles. So, but on December 31, as I said, between June 30th, so on June 30th, we're translating every stickle at 46 cents. So essentially, we paid out for every stickle that we paid out 46 cents. And at December, for every stickle we paid out, in reality, the worth is only 42 cents. So given we paid out the dividend in December, we would have saved 4 cents a stickle. But we paid it out back in June. So we have to look at, okay, 20,000 stickles at an impact of 4 cents per stickle, and we get 800. So essentially, this FX variation cost us an extra 800 in dollars by just paying it in June rather than December. Again, the delta here is 4 cents, and this 4 cents is affecting us in terms of, wow, okay, we paid them an extra 800 because of the timing. So 1 and 2 together is equal to a decrease in relative value of net assets for the amount of 60,800.